Assalamualaikum warahmatullahi wabarakatuh. A very good morning to all my students. Today we are chapter 7 of the Islamic finance subject. Regarding the TAKAFUL product. So the learning objective is number one, describe the types and features of TAKAFUL product. Number two, explain the role TAKAFUL operator and relevant regulatory requirements. 3. Distinguish between takaful, which is the Islamic insurance, versus the conventional insurance. So, number 4, describe the underlying contracts for takaful product. It's a very interesting learning objective. You can focus and understand. Otherwise, we can still ask question. Yeah, because I think this is the core matter you need to know for the Islamic insurance product. Yeah. Once you understand this as your basic, then you can learn further. What we're teaching here is more on the basic, or we call it core, the core things. Like you're building a house, you must have a good base. If the base is strong, in future, you want to build a house on top of the base is very easy already. So you need to be careful and pay attention on this core subject that we teach you. Because you don't understand the basic thing that we teach you, later on when you want to enrich your knowledge more on the subject, for example, this takaful, you won't be understand because you don't understand the basic tenets of the subject. For example, we're talking about the four principle or tenets of Islamic banking. What is that? Should be no riba. There should be no uncertainty. Must understand also what is uncertainty. A lot of people, they don't understand. They ask me what is uncertainty. By now you should understand because I've been telling you many times. Number 3, there's no case of gambling involved. Number 4, all the business transaction must be halal. That is 4 tenets of Islamic banking. You understand this, after this you learn anything or you read any information in Islamic banking, it goes back to the 4th principle. It doesn't go far away from it. So you understand that 4 principle, the rest of the new information that you're going to learn in future, you read through article, you read through all kinds of things, it will help you to understand better. But you don't understand the 4 basic things, then whatever you read, you won't be understanding. I give a good example. You're talking about skill studies. For example, last time when I see film shows or television, film on law subject, they say there's court matter, everything. I don't understand what they're talking in the television. Because all the word they say, legal meanings, I don't understand. But after I took up my law degree now, then I enjoy listening or watching the TV show which have legal subject. Because you can understand what they're talking. Now what am my problem? If I see the TV show, for example, on medical drama, I don't understand. Because a lot of the terms they are talking on the medical thing, we never learn. We don't understand what they're talking, the terminology. So same thing you are studying now, if you don't pay attention the basic thing of that subject, then in future, even you read regarding Islamic finance on banking or insurance, you still don't understand. Yeah. So the little bit tips I should emphasis for you to know to become a good student or become effective student in learning lah. Teaching is our part. Teaching also, we have our ways of teaching. There are many ways of teaching also. Yeah? And then on learning, your part, you must also have ways of learning. You got the wrong way of learning, you don't learn anything. Yeah. Okay, that's some information that I will share to be a good student or a good learner lah, for you to study lah. Yeah. Okay, on the introduction, we will consider the types of family and general takaful product and their features, the role of takaful operator, and the regulation and the governance of the takaful industry, which in this case is the government Malaysia lah. If we're talking about Malaysia, we government Malaysia lah, which are the regulator which issue the license. We will also review the key differences between our conventional and Islamic insurance or takaful, including the underlying contract of the takaful product. So insurance, conventional insurance also have their product and the names. Takaful also have their product and the names, and what are the difference and what are the similarities that you can see. Then policyholder needs and expectation are addressed in both family and general takaful. Who are the policyholder here? Policyholder, you are the policyholder. We are the policyholder. We buy the insurance. They call it policyholder. So the person who buy the insurance is named as a policy holder. In case you not clear, yeah. Due to the nature of takaful contracts and the relationships between the policy holders and the takaful operator. Takaful operator is the person who operate the takaful company lah. Yeah. The regulatory framework and the government's mechanism that have been implemented will also be discussed in this chapter. Yeah? What are the government licensing? What are all the regulatory framework that the takaful operator have to fulfill, yeah, to operate as a takaful insurance. So number one, we have these types of family and general takaful product. So this is one types of insurance, takaful insurance. So it's an indemnity-based insurance, cover the loss suffered by policyholder by replacing value equivalent to that prior to the damage loss. What it means here, you as a policyholder, you buy the insurance. For example, we call it accident insurance, kemalangan, insurance kemalangan. So they will say in the policy that you buy, if you are in an accident, on death, they will pay you 50,000 ringgit. If you accident, you lost one limb, your leg or your hand, they will pay you 10,000 ringgit. If you, after accident, you're totally incapable, but you didn't die, they pay you a certain amount of money. So this is what they call it indemnity-based insurance covers. So they cover, they indemnify part by part of your body or if you're death. Yeah. So that one type of insurance. We call it this life insurance. Yeah, life insurance policy in the conventional type. And then the other one is non-indemnity based insurance, only provides protection in terms of financial payment to the money and disease policyholder or to the policyholder himself in the case of permanent disability. Here, maybe I already told you about the last class about one of our students who met an accident and died, and his girlfriend was badly damaged or badly accident, but didn't die. So here, you are not the policyholder. This both our student, the boy and the girl, is not the policyholder. So who is policyholder here? In this situation, I told you the last class, the policyholder is the college. We buy the insurance. The first one just now, you buy the insurance. The policyholder buy the insurance. The non-indemnity, we buy the insurance to cover our business, to cover our student, to cover our loss in the college. if there's case of burglary. So the insurance will pay the college. So in this case just now, the last time the two students, they are not the policy holder. They are our student. So the policy holder is college. So as I mentioned in the last class, because the student was riding a motorcycle which he borrowed from a friend, which have no road tag, and there's definitely no insurance cover for the motorcycle, and he himself doesn't have a license to ride a motorcycle, and then he bring another pillion rider, that means his girlfriend, to ride a motorcycle. So on all in all, he broke a lot of laws. Yeah, first the law, he has no license to ride a motorcycle. Number two, the motorcycle does not have insurance and road tag. So definitely, there's nothing can be claimed because even the motorcycle not belong to him. Even the motorcycle have an insurance, but since not in his name, he also cannot claim anything. So that's where he's lucky, because our college bought the insurance for the student. So because of his death, so the TAKAFUL insurance paid, I think about 12,000 ringgit to the family. And other pillion rider, which is the other girl student, was provided by the TAKAFUL expenses when he is in the hospital. Yeah, certain amount of expenses he paid. But because also she went to the government hospital, so most of the thing, if not mistaken, covered everything, the medical expenses and all the thing. So this is, we call it non-indemnity based insurance. Not the owner own the policy holder, but it was a third party, that means the college. So you can understand now what we were talking. One is the family takaful, and other one is general takaful. So here we can say that the indemnity based insurance is the family types of takaful, whereas the non-indemnity is the general takaful product. Hope that clarify. These are all basic things you need to know before we move on. Yeah, you miss out this point, then you cannot understand what we're going to tell you in future. Okay, well, here is the family takaful. I think I already explained more. Let's see what we have here. Family takaful consists of an amalgamation of traditional facets of conventional insurance, issuing against a contingent and saving towards a capital sum of survival. So the family takaful is almost the same like the conventional insurance. As I said, it's now what they are covered of. We already explained. Two, generally speaking, family takaful plans can be divided into two. Okay. So in a family takaful, it can be individual plans, which I said you buy the policy for your own protection from accident and also on. Second is a mortgage plan. Mortgage plan, let's say you buy a house, so you buy the insurance to cover the loan that you buy the house. Let's say you and your mother and father bought a house, and they borrowed the money from the bank, let's say 100,000 ringgit for the house, and buy the family takaful, we call it the mortgage plan insurance for the house. So what it means, number one, in case the house burn, so the insurance will pay the loss from the house. Let's say you buy your insurance 100,000, then part of the house burn or the whole house burn, and it costs 100,000 ringgit to pay. So the takaful will give your parent 100,000 ringgit to build a new house or to buy a new house. The other point is the mortgage plan is that both your parent bought a house and borrowed the money from the bank, let's say 100,000 ringgit. So they have to pay within, let's say, 20 years installment. So suddenly let's say your father lah. Let's say take one person, senang, easy to say. Let's say your father borrowed 100,000 from the bank to buy the house and pay 25 years installment. Suddenly your father after 10 years pass away, meninggal dunia, pass away, rest in peace. Yeah. So this mortgage plan, the insurance will cover to pay the balance of your father installment. So your mother and you who stay in the house no need to pay anymore for the house. So this is also one part of family takaful lah, yeah, for housing usage. Just now the first one for individual punya own, what in case your accident or kind of thing. The other one is for your property. The mortgage plan here is come to for property. Then credit plans. Now, there is a very good trend. For example, now I borrow from the bank 1 million, which is in true case we bought now. We borrowed from loan 1 million. So the bank who give us the loan, or in this case, the government body who give us the loan, they said you buy this family takaful insurance for 1 million. I need to pay the loan back within 10 years. So in case after 5 years I died, so there's still a balance of 100,000 not paid to the banks or the government body. So this insurance will pay the balance of my debts that I borrowed from the banks. And my other wives or family does not have to pay. So again, this is another type of family takaful that cover your loans that you borrowed from the bank for businesses lah. Yeah. The other one mortgage now is more specific for housing, for house lah, for house. Specific for mortgage plan is for houses lah. Credit plan is for business loan. The money you borrow for business. There's nothing to mortgage. At least the mortgage plan, they still mortgage your house to the bank for the loan. But here, credit plan for loan that we borrow for business, there's nothing we give guarantee. So they want us to buy the family takaful insurance to cover the loan that we borrow in case of our death. Then the insurance will pay the balance of the loan. Other one, family takaful, there are many other things, but the fourth one is group term and hospital plans. This is more, we call it family takaful for medical benefits. So normally most of people will buy it now. So anytime when you go to the hospital because of any sickness, then you are hospitalized. So all the hospital charges will be paid by the takaful insurance that we bought for the hospital plans. So very clear, I already explained to you on the family takaful products. So family takaful plans cover participants who wish to save money for dependents should the participant die prematurely. So the same is just now I said, for example, for the house lah. If I buy or your father buy a house for 100,000 for 25 years, after 10 years he paid 50,000. So when he die, the insurance will pay off the other 50,000. So it helps the family who stay does not have to pay the balance of the loan. Also in the case of just now, the business loan, same category or same concept lah. Then the common product for family takaful are individual plans, mortgage plan, credit plan, and this I already explained just now, yeah, in detail. So benefit payable under individual takaful plan, as I said just now, benefit on death, yeah. And then benefit on the survival to maturity plan. So number one, benefit on death, I already explained to you straightforward. Second one, benefit on survival of maturity plan. The maturity benefit will materialize at the participant survive up to the maturity of takaful plan. What it is? So normally you buy insurance takaful, they have a time limit. You see the insurance cover you for 20 years. Your age now 20, or maybe your age now 30. So the insurance you buy is for your medical or for your life insurance is for 30 years. So after you buy, you age of 30 currently now, plus another 30 years, you reach age of 60 years old. So after the age of 60 years old, the insurance plan has already matured. They stop there. So what happened now? You didn't die. You didn't have any problem. So what they do, they will give you the benefit of the money or the insurance that you buy. It's like your saving account. You put a saving account, after 10 years, you take it out. So like that kind of concept. But you put a saving account in the bank, they don't cover your any case you die or anything that you accident, because there's no benefit from your save in the saving account in the bank. But here you buy the insurance is for your protection. But there are dual strategy. In case at the end of the maturity date that you buy the insurance for 20 years or 30 years, nothing happened to you, they give you back certain amount of money that you already paid as your premiums, because they use the premium, they invest it, they make a lot of money, so they will give you some money back for your insurance when it matches or when it come to maturity date. Yeah. So number one, they cover whatever problem, death or accident that you have. The second thing, if nothing happened to you, they will still give you some money back. But in between, there's something happened to you, they will deduct some money that they given you earlier. Let's say you're hospitalized, after 5 years you're hospitalized, you charge you 20,000 for the hospital. So when it comes to maturity date, you still survive. In case they're supposed to give you 50,000, they will deduct the 20,000. Last time they already paid for your hospital benefit. Third one, surrender benefit. Okay, what is surrender benefit? Surrender benefit arises when a participant in the TAKAFUL plan decide to surrender a certificate assembly or simply terminate the TAKAFUL policy. Okay, what is this? At the age of 30, when you start working, or 25 you start working, so buy insurance or TAKAFUL plan for 30 years. But, so you 30 years plus 25, so you expect by 55 years you retire. If nothing happen, you can get your money, or in between anything happen, you still get protection or money paid for the accident that you involve or the sickness you have to stay in the hospital. But here, surrender benefit, what happened? You buy just now the insurance for 30 years. Suddenly, after 10 years, for example, you want to migrate to Australia, or for other reason that you say, you want to stop now to pay the insurance. You must understand, you pay the insurance, there are two ways. For the mortgage, you pay one lump sum from the beginning when you buy the house. Let's say the house 100,000, you buy the insurance for the cost to cover is 10,000 ringgit. So one go. But some of them, like life insurance, you pay every month. You pay every month. Like you keep installment every month. But it's cheaper lah. For example, you buy for 100,000 insurance. So every month you have to pay 300 ringgit. Like that lah. Yeah. You don't pay just now like house, you pay upfront 10,000 ringgit. Yeah. So maybe I said after 10 years you want to migrate, or maybe now your COVID case, you are out of job, no more job. So you can't pay anymore to the insurance company, your installment, your premiums, your installment every month. So when you want to stop, because you have no money to pay. And now also because of this COVID, maybe you need money also to survive. Other than the government give you some money, we also need more money to survive because you are out of job. There's family for you to feed. So what happened? You surrender insurance that you bought just now. Let's say you bought your life insurance for maybe 100,000 ringgit. You pay monthly 300 ringgit maybe. So now after 10 years, you surrender the insurance or terminate lah, or terminate the policy. They don't call it terminate in insurance, they call it surrender. But it's in actual it's a termination lah. Dibatalkan. So the insurance again will calculate for the last 10 years, you've been paying the money, the insurance collect your premium, and nothing happened to you, let's say nothing happened to you, so they will calculate based on their calculation, or they already agreed from you from the beginning how the table to calculate, they will give back some money to you. Maybe just now you buy 400,000, but after 10 years now, they calculate, okay, they give back to you 20,000 ringgit. So bad time like today, COVID, you got 20,000 ringgit. At least you can put maybe food on the table for the next 6 months, maybe. Yeah. So these are the benefits payable under the individual takaful plans. These are all we're talking about policy holder. That means you buy on your own name, not a third party name, not like college buy. That kind is not under this type of plans. Yeah. Okay, then we have the second part just now, the general takaful. So cover the loss suffered by participant by replacing value equivalent to that prior of damage of loss. So as I said just now lah, the general takaful, for example, is more like you buy insurance to cover for accident, for cover your mortgage house. So in the case there's a burn happen in the house, so you lost 50,000 in the house for which the house cost 100,000. So the takaful will assess and they will pay you 50,000. Like insurance for, let's say it's general for accident. If you break your leg, the takaful from the beginning, as I said, if you break your leg, they will pay you 100,000 ringgit, for example. If you become paralyzed, 200,000 ringgit. So this is, we call it general plan, not the specific, just now individual plan. Yeah. So this one cover more like say for you have cars, you have motorcycle, all this kind of insurance, you aeroplane, you buy insurance, aeroplane crash, they will use the insurance to pay you or your next of kin or your family the loss that you had. So okay, in Islamic, so the names of the product is different lah from the conventional. Yeah. For example, number one wakalah. This fixed amount fees paid to the takaful operator. Yeah. This we can say maybe like just now you buy the insurance for house lah. You pay a fixed amount for 100,000 worth of house. You pay the takaful operator or the takaful company 10,000 ringgit to cover the 100,000 house, and this we call it wakalah. You wakilkan dia, wakil to them. Anything happen, you pay me this 100,000 damages that I got. Mudarabah, no fee is paid. Takaful operator will share the profit investment from the takafi and both investment, profit and surplus for general takaful. So mudarabah is like profit sharing. Yeah. So here is more like just now I said, they will use the premium that you paid monthly to invest. The takaful operator will invest the money for businesses or whatever they want to do. And then at the end of the day, when they calculate, they make the profit every year, then they share the profit with you. Especially like Islamic takaful, they will give even the profit yearly to you. If you ask for yearly, they will give you yearly. If you say you want the profit at the end of the 30 years, they will give you at the end of 30 years. So it depends on you. Yeah. Third one, wakalah for management and mudarabah for investment. Fixed amount fees paid to takaful operator for underwriting services. This just now for example loan, like loan. Yeah. Takaful operator will also share the investment profit. Same thing. So we pay. Let's say I borrowed 1 million from the bank, so I buy the insurance for takaful to cover my loan. For example, my age is old, I'm 65 years old, it's quite expensive. We say we pay 50,000 ringgit to cover for my 10-year loan, that 1 million loan. So this money, the takaful operator will use it for investment. We pay them the premium for them. So one is to protect our loan or our houses. Second, if nothing happen, from the 50,000 ringgit plus all the other Premiums collect from other policy holder or people who buy the insurance, they will invest it. So from the investment, millions of dollars maybe, the profit, then they will share back the profit to us, depend on how much we pay our premium for the insurance. Yeah? So that is the basic understanding lah. The rest are more on the detail of the management model. We can read, but not to worry too much. But as I explained, these are the basic thing how they operate. Yeah? I mean how the TAKAFUL operator. TAKAFUL operator here mean the company lah. Like here we can see big name Etika Insurance, something like that. So they are, we call it TAKAFUL operator or TAKAFUL company or insurance company. Yeah. So all the same lah. So what is the role again, as we mentioned just now, what is the role of TAKAFUL operator? What they do with the money? So for the conventional insurance, non-Islamic one, the companies are profit-oriented operation from which shareholders expect to make reasonable return of investment. So like you keep the money in the bank for fixed deposit lah. So if fixed deposit, the bank give you 3%. So for you buy the conventional insurance, you also will expect the profit from the insurance at least 3% because it's almost like the bank. But the different here, you got the profit plus also you are covered in case happening to you. But your money you put in the bank as deposit is only you get the return 3% or 4%, but they don't cover anything else. For example, your accident, your house burn, that kind of thing. So there is a difference. So in funding this guarantee provided by the insurance company, shareholders are entitled to a share of surplus, including mortality surplus in life insurance arising from insurance operation. So from the premium we pay them, as I said just now, they will invest the money, and then when they make the profit, they will give back to the shareholders. But it's no guarantee certain amount of percent. But as I said just now, if the bank can give you a return of 3 to 4%, normally the commercial insurance also are trying to match the same return to make it more palatable for people to buy the insurance rather to keep the money in the bank. The role of a TAKAFUL operator. So first Islamic model TAKAFUL operator was set up in Sudan. Sudan, one of the Islamic country in Africa. Mutuality suggests that the TAKAFUL operator cannot work to make profit for himself as mutual insurance companies almost do. So different between TAKAFUL and conventional. The conventional, just now I said, is more on profit oriented kind of operation, whereas the Islamic one, they are not profit oriented kind of operator. They are more like cooperative kind of operator to benefit everyone, not purely for profit making. Yeah? So the first TAKAFUL company in the world that is in Sudan, model was primarily based on pure cooperative Islamic insurance. So cooperative Islamic insurance, I did explain a little bit more deeper last class. There is, again, for example here, it's like cooperative kind of situation, like 5 of you going for outing, and each of you come with 100 ringgit, so you got 500 ringgit, and you said if any one of you got injured in the picnic, you will get the 500 ringgit. That is kind of, we call it cooperative kind of insurance. Yeah, it's not purely profit. But of course, in this case, they collect a lot of money. They collect a lot of money, so they use that money, not the 500 ringgit, so much money they will collect from the policyholder for investment. So from the investment, they make profit, they also give back the profit to the policyholder, minus their operation. But not like the conventional. They will make profit for themselves, they will give some to the policyholder, but they keep part of the profit for themselves. But TAKAFUL or the Islamic one, they cannot keep the profit for themselves. They only take the operation cost. Maybe the operation cost 3%, they will take. The rest all were returned back equivalently, like cooperative just now, to the individual policyholder. So that's important to know the difference. That's why sometimes we get more return buying Islamic takaful than the conventional takaful. That is for sure. I have experienced that. We are not talking about theory here, but I'm talking in the real world, real practice. Yeah. Next one, this model presupposes that takaful operator we established from among the participants of the scheme. So, well, the takaful operator can be established from among the participants, or it can be a company by itself lah. Somebody set a company, or any one of you can be. Just now, simple example is the 5 of you going for picnic. So actually here the operator is one of you lah, or we call it all 5 of you lah. 5 of you the operator lah. So any one of you go injured, you got the money. So that kind of model lah. Yeah. But doesn't stop from the example. Bank Islam set up a takaful operator company. Can also. Yeah. Doesn't say that must be among you must be operator. It can be another body. That's not prohibited in Islamic law. Yeah. The all important decision such as the proportionate sharing of the surplus must be made by the participant in the General Assembly. General Assembly means the general meeting you have every year, annual general meeting every year, which is the umbrella body that pulls together the investors. So every year, all the people invest must have their own meeting, general meeting, discuss how much profit we make in case any loss or whatever, minus all the costs. This is the amount of profit. Now this we distribute equally to the each participant according to the premiums amount they paid. So that's how they make decision. Not like the conventional decision only by the owner of the company. The shareholders have no say. Whereas in Islamic takaful, every one of you will participate, every one of you will agree, then the operator just follow and pay accordingly what all of the policyholder decide. Compared to just now the conventional, the policyholder does not decide by the owner of the company. Yeah? So they want to give you little amount of money, you cannot say anything. They want to give more, better. But here, you are the one to decide how much to give to each of you, or maybe some you want to keep it for save it for the future expenses or kind of thing. Yeah. So the decision is the policyholder, not the company. There's two distinct from the conventional operator, which they are decided by the owner of the company. Okay, the role, so what happened to this company, the operator? What they are doing, yeah? So takaful in Malaysia, okay, we talk about the Malaysian model lah, because we in the world is one of the Muslim country which set up this insurance takaful. If you can see in the past lecture, we're talking about Islamic bank. The first one is in saving bank in Egypt, and then the real commercial bank in Dubai. But apparently on takaful insurance, since we start our banking late, we start 1963 in Malaysia, the first bank Islam. But on the insurance, we are the first in the world. So they in the world now, they're using our Malaysian model for the takaful insurance. For example, in Egypt and in Dubai, they are just on the banking. Yeah, for now, everyone have also their insurance division in each Islamic bank throughout the whole world. So in 1984, Malaysian Parliament passed the Takaful Act. Yeah. So 1963, we have our first Bank Islam. 1984, we have our first approval for the Takaful insurance. Under the Takaful Act, the Takaful must incorporate a company. So under the Act, there must be a company. Yeah, set up must be a company under the Company Act to run the insurance business of the takaful. Yeah. The operator in Malaysia must hold a minimum statutory deposit of ringgit 300,000. Well, this is more on the government ruling lah. They passed in parliament, the company must set up that time 300,000 lah, but now it's more lah. So operator must also pay annual registration fees and maintain all term surplus asset to the bank. So registration fees to the government, because the government give you the license to register all kind of thing. This is very minimal thing lah, not really big thing. So the Takaful Malaysia requires that all registered Takaful operator must maintain a surplus of asset liability not less than 5 million in respect of each of Takaful business. So there's a condition that they must have a to set up the Takaful company, they must have a minimum capital of 5 million. Those days, now I think maybe 10 million. Yeah. The first Takaful operator license under the Act was company defined in the Company Act. So you have to set up the company under the Company Act, which was a new model of managing Takaful activities, different from the Sudanese practice. Okay. The Sudanese practice, their company is like cooperative company. In Malaysia, we have also a cooperative company. But in Malaysia, the Takaful company is under the Company Act, not under the Cooperative Act. So Malaysia, they are cooperative company, but for the Takaful, they are registered under the Company Act, not the Cooperative Act. Whereas in Sudan, they first set up that one, they have this, their registration is under the Cooperative Act. For example, like the banking, the Egypt, the first bank is not commercial bank, it's a saving bank. Then we have this commercial bank. Yeah? Whereas in Malaysia, we have this straight to have the company account. Then the Malaysian practice was later followed by most Takaful operators in other parts of the world, apart from Sudan. As I mentioned just now every part of the world which run Islamic banking, they have also the insurance or the Takaful section, because they need two together to run a business anyway. They give you loan for the banks for to buy a house, the Islamic banking, but how to cover the risk? So they need the insurance to Takaful insurance to cover the risk on behalf of the bank. So bit on the difference between the Sudan and Malaysian model. On the issue of cooperative Takaful model, which is I said in Sudan they use the Cooperative Act, which is the commercial Takaful model as practiced in other part of the world. Start in Malaysia, so you start with the Company Act, it's a commercial model, not a cooperative model, and all other parts of the world also follow Malaysian model. Yeah. So then next one, it can be concluded that the structure and motives of these two models are both acceptable under Sharia principle. Both actually can be accepted in the Sharia law. But in Malaysia, we have two business. One under the Company Act, one under the Cooperative Act. Both are business acceptable by the government, except that company runs differently, cooperative runs it differently. Yeah, business is the same. The only contentious issue is whether an underwriting surplus, be it from general or family Takaful, can be distributed to Takaful company. So there's always a contentious issue whether some of the surplus will have to, whether it goes each of sent to the policyholder, or some, as I said, they have to keep it for the Takaful for their future operation. So some say yes, some say no, some say okay, but in the Islamic law does not really specify. So it's up to the shareholders and the policyholders. Regulatory and governance requirement. Okay, some countries have separate legislation to allow practice Takaful, and the establishment of Sharia Advisory Board in Takaful company is a requirement. So some country, like in Malaysia just now, we have a separate act, Takaful Act for insurance. The only different from the conventional that we must have a Sharia Advisory Board. The rest is all the same, Insurance Act. Okay, the key differences between Takaful and conventional. So the position of nominee, unlike the practice of conventional insurance, a nominee, particularly under Takaful Act, does not necessarily refer to a person who have ultimate right for over the death benefit. Yeah. So that is one position. Number two, non-Muslim participation in Takaful Act has made it clear that non-Muslim can participate in TAKAFUL scheme. So same thing like Islamic banking lah. Non-Muslim also can borrow here. Non-Muslim also can buy TAKAFUL insurance. Three principal insurance interests. The non-requirement of insurable interest in family. TAKAFUL highlights the distinctive feature of TAKAFUL, that is the doctrine of mutual help, void of commercial gain. And as I said, give you a very good example of 5 of you went for a picnic, one of you got hurt, so you will get the money. So it's more like a mutual help, not for commercial gain. Whereas in the conventional insurance, they have the mutual help, but they have also a commercial purposes. The role of a general broker, okay, here the dimension and required practice of both agent and broker are outlined in many modern insurance act substantiated by case law lah. So it's almost the same lah, whether conventional or TAKAFUL insurance. We need the agent or parties to act on behalf of the TAKAFUL operator and the policy holder, the one who going to buy it. Yeah. Solvency margin, the TAKAFUL Act has imposed the obligation of maintain a solvency margin of all times on licensed TAKAFUL companies. Actually, this requirement is based on the Act. So they have certain thing, they must have solvency kind of money inside the operation kind of thing. Yeah. So this, but for this one, both the conventional and the TAKAFUL, they need to have this solvency requirement. Yeah. So some are similar, some are non-similar. This is a little bit key differences of the both Islam and non and conventional insurance. So the underlying contract for TAKAFUL product, TAKAFUL is a sales contract. So many countries, before establishment of separate insurance act, insurance was regulated through company act or contract. Before proper act passed the parliament on TAKAFUL regulatory needs, so they use the simple contract act for selling the TAKAFUL insurance. That's what it means. Yeah? So just some little bit history lah. But now there's no issue lah, because they have the proper insurance act and to run the insurance based on the act passed by the parliament. This was prior to that lah. They use the sales contract act. It's like company lah, just buying and selling lah. So it doesn't come under insurance act, but it's still under act, but under company act. Yeah? It's still legal lah. Okay, what is uncertainty? No matter how rigorous the insurance contract is, uncertainty in either the premium, with regard to element to be paid prior to occurrence of insured gains, or indemnity, or both, and element of the business insurance. So this is always the thing. Let's say today you just buy a house for 100,000. You just buy the insurance. Tomorrow the house got burned. So there's always this uncertainty for the TAKAFUL insurance to do the business, because this is part of the risk they're taking. That's what we're trying to say here. Because nothing is certain in like insurance. Because whether your house got burned, whether you got an accident, you're going to break your legs, nobody knows. Yeah. So this is one of the TAKAFUL that they have to accept the uncertainty, whereas in the Islamic banking, you can't use uncertainty in the part of the operation. In TAKAFUL, they allowed it because of the situation, as I said just now. Yeah? Because you buy the insurance actually for uncertainty, because you're not certain whether you're going to sick, whether you're going to die, whether you're going to kind of thing. So in this respect, uncertainty in the TAKAFUL insurance, Islam insurance is acceptable, yeah, but not in the banking side. TAKAFUL resolution of Islamic Fiqh Academy. Okay, if you Islamic Fiqh Academy, fiqh is part and parcel of the law that comes out of the Sharia ruling lah. Sharia law is the general law. Then from there they interpret it. Then the implementation part that we call it fiqh lah. The fiqh law is the substantive law or the implementation law. But this fake law is not new. It just comes out of the Sharia law lah. It's not a new law. It's just more on a practical part of the law. Because Sharia is general. Yeah. So Islamic fiqh from the OIC, this one examine the practice of commercial insurance and issued the following resolution. The commercial insurance contract with a fixed periodical premium, which is commonly used by the commercial insurance company, is a contract that contains a major element of risk, which void the contract and therefore prohibited haram according to Sharia law. Yeah. So the way the commercial way of charging the premiums is not acceptable in the Sharia law. So the alternative contract which conform, so what happened in the Sharia law, the alternative way which conform the principle of Islamic dealing is the contract of cooperative insurance, found not the basis of charity and cooperation. So the alternative, as I said, if 5 of you go for picnic, one of you get hurt. So that kind of cooperative way of Islam dealing in the practice of the Islamic insurance, not the conventional way, yeah, which is different, as both of them are different. Tabaru, okay. What is tabaru? Family and general takaful. Tabaru, the donation contract word is tandem with the nature of both family and general. In family takaful, a small portion of takaful contribution will be treated as donation. Okay, so part of the income they will put aside as a donation. The accumulation of this goes toward meeting death benefit. The remaining portion goes toward personal accident and accrues profit. The quantum of which is determined by success of takaful operator in managing the investment. Yeah. So the tabaru rate is determined by the actuary. Actuary is the fellow who calculate the premium have to be paid, you know. Or these people, we call it actuaries. Yeah. So there's one subject you must have a basic bachelor in accounting, and then you can take another one, you call it the bachelor or the law on apa ni, the degree on actuary. Yeah. So it's extended version of accounting. Accounting is lower end, then the actuary is the higher end. These people will know how to do the calculation. 20 years, how much to pay you? 30 years, how much to pay you? This kind of thing. So this is very difficult subject. Yeah, not many can do it, but people like bank, bankara, they employ this kind of people to do all the government calculation, projection, budgeting, all these things. Yeah? So we call it actuaries. Yeah. So the borrow rate is determined by an actuary. Actuary is a person lah, who calculate the amount just now. Future amount, current amount, future discount, current discount, all the things. If you are familiar with the accounting principle, you understand what I'm saying lah. Yeah. So what they calculate? The expected claim rate, as I said just now. The incidence of claim. For example, if you want to claim case of accident, burn or something. And the basic cover. Let's say you go to hospital, what the basic cover? You have to pay. The reserving basis, what are the money they have to keep to reserve for future use or for future for benefit of you. The profit sharing expectation between takaful operator and the person is relevant. So the profit sharing also they have to calculate from the beginning, like in the banking just now lah. For example, you want to have mudarabah, what is the profit? 30, 40, 30, 70, 40, 60. So you must have in Islamic insurance, all this must be specified, must be spelled from the beginning, not toward the end like the conventional insurance. Sometimes we also don't know how to calculate. We just have the receiving end, yes or no. Sometimes we also don't know. So this is uncertainty. In this case, uncertainty, it cannot happen in the Islamic insurance calculation. Any expenses or commission loading. Let's say the expenses for the operator, the company, how much you have to charge? 2%, 1%, or any commission loading. Commission is paid to the agent. Even agent who help you to get the agent who go around to sell the policy to you. So how much agent commission paid by the insurance? So we call it commission loading lah. Actually commission paid lah, but in this term they call it loading. We have to teach you something new word lah. Next time when you, like I said just now, you learn law, you have their terms, how they talking about. You learn medical, they have their own terminology. You learn insurance, commission paid, they don't call it commission paid. They call it commercial loading. These are new words you need to learn. That's why there are difference between you are school children, you are college student, you are university student, you are PhD student. So that's why in this college we start giving you new words for you to use. Yeah? So that when people talk to you, they know whether you are a school children, whether you are a college student, whether you are a university student, whether you are a lawyer, whether you are non-lawyer student, law student. For example, last time before I learned law, when the lawyer talked to me, Dr. Murad, this is fraud. I said, what? Fraud? No, 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 fraud. I that time doesn't know the meaning of even fraud. You know what is fraud? Maybe you also thought fraud is frog. Frog, F-R-O-G. Fraud, F-R-A-U-D. Tipu, cheating. So in you in school, we say, hey, you cheat me, I cheat you, cheat you. When you go to the court, they don't use word cheat. If you submit the paper in the court, your case in the court, putting cheat, I cheat him, he cheat me, the judge will throw your paper out. Because they don't use cheat word in the court, they use word fraud. This again just now lah. That's why it's important for you to become a college student. When you're college student, you talk with your friend, you cannot be talking like a school children. Then you put yourself very low. And the people who sit beside you, they will know whether you are college student, whether you are school student, whether you are university student. The way the word you talk. So be careful. That's why we teach you new word, new phrases. You need to use it in your daily life so that people will respect you. They know, oh, these people are knowledgeable. This student is knowledgeable. He's not school student. He's a university student or he's a college student. These are the things here. Other than the knowledge we teach you, we also teach you new words, new terminology for you to use in your daily life. You have to start changing all using this word to make yourself more credible, to make yourself more respected by the society. Please understand that, yeah. There's no point you learn, let's say we said, yeah, commission loading. You still outside there, you said how much you pay for the commission agent? Cannot lah. You must say there, what is the loading? What is the loading the agent charge? Then people know, hey, you know something. You are not school children. You are college student. This is very important. Very important. Yeah, very important. Don't take it very lightly because it affect your personality, your face value. Yeah. One day I was having makan lah in a restaurant. There's two young lady student lah using school apa ni shirt sitting also at the table. But I missed the way these two girl were talking. He was talking about somebody else parent lah. He said, you know, the parent of such and such is getting divorced. Oh yeah, yeah, it's normal lah. What they call it? Mid-age crisis. Umur pertengahan. That means what it's trying to say, when you first married, you just get married very fast. Like you all want to get married very fast. But after you married 10 years, you got bored with your partner, or you're looking for another fella much better than your partner. So they call it midlife crisis. I never heard about that word midlife crisis, but these two young girl, when they said, oh yeah, this is a case of midlife crisis. Yeah, something I learned lah. What is meaning midlife crisis? Well, that time I was very young. I was still a bachelor anyway. I was sitting beside the two girl talking. I should not be listening, but she talked a little bit loud, so I heard lah. So I was surprised lah. She can talk that kind of word. Whereas it's supposed, I think maybe Form 4, Form 5, two girls. So that, but we respect him. I said, wow, this girl really knowledgeable. He can use this kind of word at this age. He would not yet married. He can talk about midlife crisis. So these are the things sometimes in this world, you must make sure when you talk, whatever words you use will make people respect you. Okay? It's not really part of the lecture, but part of the knowledge I want to give you as you are growing older now lah. Yeah, you no more school children. You remember you are now college student. Yeah? Okay, it's almost 1 hour. So in summary, conventional insurance is broadly categorized into life insurance. As I said, one is non-indemnity, one is indemnity-based. We already explained just now. Family takaful, Islamic equivalent of conventional life insurance. Okay, life insurance in the conventional, here we call it family takaful lah. Amalgamation of traditional facet of confidential insurance, insuring against contingent. It's almost like their product is like the traditional insurance, but as I said, they have some Islamic features down there and some Islamic ruling, for example, Sharia board. So like the conventional insurance, they collect your premium, they can invest in any kind of business, but in family takaful, they only can invest their investment in those four tenets of Islam lah. Should be no interest element in that business, should be no uncertainty, should be no gambling, and all must be halal products. So this is a different investment that the conventional insurance can do and takaful insurance can do. Yeah. Family takaful plans can be divided into individual plan, dividend for personal, mortgage, let's say I said for property, credit for loan, I borrow loan just now, and group term hospital benefit and for hospitalization. Individual plans can take three forms. Benefit upon death, as I said just now, we separate the three. Once you into death or accident, you will get your benefit. Benefit when it's matured, when you buy the insurance for 20 years or 30 years, nothing happened to you, then you get the benefit. And also halfway you cannot pay, you still surrender, they will pay a part of the benefit. Yeah, interesting, you should know that. Lastly, family takaful can be managed by takaful operator on the basis of wakalah and mudarabah contract. So as mentioned just now, it can be operated by among you, but here the money is big. So normally here the government don't allow among you to operate the takaful. It must be a proper company under the Company Act to operate the thing, and then we give the authority to the company to operate. So the authority you give to me, we call it wakalah atau wakilkan. I wakilkan, I bagi for you. So we call it wakalah lah. And then the mudarabah contract, because we sign for them, they use your money to do the investment. Yeah. Lastly, interesting for you to know, for example, if you got a summon from the court, they will say that you can present by yourself or by your lawyer. So that means if you go to the court, you can, if you know how to present yourself in the court and the law, you can present yourself, and or otherwise you use a lawyer. So same thing here. Even the Islamic law say you can operate by yourself the insurance, but the government here, we want it to make sure structured and proper regulated. So they set up a proper act, the Takaful Act, which only can be operated by a company registered under the SSM. Yeah? So this a little bit here and there. I am giving you more extra knowledge, so because we are on the 7 topic now, so another 2 or 3 more topic to go in to be finished. So you need to know a little bit more, you will be more matured now to understand what I'm trying to say. So my lecture a little bit expand so that you will benefit from the experience I have for over 40 years in my business, running a business, and the experience which I share with you, not only from the subject but also a little bit extra as we go on to finish the subject of Islamic finance. So thank you very much. All the best. Keep yourself safe, and whatever thing we can discuss further, you can discuss further with Madam Chair. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.